Hello, everyone. Welcome to Deloitte's Debrief Tax Webcast series in Asia Pacific. Our webcast today is from our indirect tax series that is titled E-invoicing and Real-Time Reporting Developments in the Asia Pacific region. My name is Renik Shah. I'm a tax technology partner in Deloitte, India. I have the pleasure of hosting today's webcast. I have three speakers with me today: Alan Buller, Raul D. Cruz, and Candy Tang. Alan is a tax partner in Deloitte New Zealand. Raul is a tax director in Deloitte Australia. And Candy is a tax partner in Deloitte China. You may access our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I would like to take a moment to highlight some of the key features of our webcast console. First, all of the users will be on listen-only mode. If you have any content-related questions, you can submit it at any time in the Q&A box at the bottom right of the screen. We'll do our best to respond to your questions during the presentation. Second, all the PC users can maximize or minimize each of the box at their convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's press slides and the related publications, please go to the download and links box. On the other hand, all the mobile users can view the slides and answer the survey on the screen. Finally, if you require any attendance record for this event, you will receive an email with the CPE certificate after watching the webcast for 50 minutes. All right, let's start off then, and let me give you an overview of what we have today for this webcast. Recently, we've seen a number of countries in the Asia Pacific region either adopt or announce an intention to adopt e-invoicing or other form of electronic reporting requirements in near future. While the approach adopted by the governments across the region have been similar, but it has not been uniform. And there are variations in the scopes and the requirements for each of the geographies. However, the driving force for the governments to adopt such requirements have broadly remained the same, which is enhancing the tax revenue and increasing efficiency and transparency in invoicing process. While these requirements are not yet mandatory in many jurisdictions in the region, based on the recent actions taken by the government in the region, it is expected that it will become mandatory in some form or the other within the next few years. With that background, in this session today, we will cover and we'll provide to you a specific focus to some of the key countries in our region that have adopted such rules. We'll cover China, Australia, New Zealand, and India. We'll also examine the regional trend so far as the requirements and the timelines are concerned. We'll share insights on how businesses can be well prepared and adapt themselves to this changing environment. And finally, we'll also share insights on how businesses can adopt a regional e-invoicing strategy to achieve efficiency and uniformity. Towards the end, we'll have a Q&A session to address any queries that you may have. Right. To start with, I'll first invite my colleague Candy, who will give us an overview of the fully digitized electronic invoice, which is FEDI e-invoicing requirements in China, and what the taxpayers are doing to be better prepared for e-invoicing. Candy, over to you.
Sure, thanks, Renik. Hello, everyone. I'm Candy Tang from Deloitte, China. Now I'm going to share with you the latest development of the e-invoicing in China. If you attended our AP debrief on e-invoicing in March this year, you may recall that the Chinese government launched a new form of e-invoice, which named the Fully Digitalized Electronic Invoice, in short FDEI, in December last year. FDEI is far more advanced than the earlier PDF or OFD form of e-invoices, in that it is fully digitalized in the life cycle of invoices from issuance, delivery, booking, and archiving. Initially, there were 3 regions joining the pilot. Now, nearly 1 year passed by, and what's the current status? As you can see from this slide, the pilot scope has been expanded. There are now 4 cities and provinces which allow the taxpayers to issue the e-invoices. Apart from Shanghai, Guangdong, and Inner Mongolia, Sichuan province joined the pilot in October, just last month. One point to note is that not all taxpayers located in these 4 regions can issue e-invoices. Only the selected taxpayers can. We have some clients who have raised their hands to voluntarily join the pilot and are now waiting for the approval of the local in-charge tax bureau. Although not many companies can issue e-invoices at the current stage, all companies in China can receive e-invoices now through the government portal. While you may know that the progress seems a bit slow, that's mainly because it has been taking more time for the government to develop the e-invoicing technology platform. Also, the government seems quite mindful and is inviting more taxpayers to join the pilot to test functionality and the stability of the system before rolling out to more taxpayers and more regions. Having said that, based on our intelligence, it is still the government's plan to finish the e-invoicing rollout nationwide within next year, 2023, and there are 6 more regions waiting to join the pilot within this year. In the meantime, the Chinese government is also in the process to build up an intelligent platform with the aim to strengthen tax administration in an intelligent way. This system is also named the Golden Tax System Phase 4, which is expected to be built up by 2025. I'll share with you more on this later. Next slide, please.
All right, that brings us to the first polling question of this session. And the question is, has your business in China started to prepare for e-invoicing? And your options are, number 1, not yet, in wait and see mode. Number 2, started to do some preparatory work. Number 3, started to deploy a system. Or number 4, already joined the pilot and issued e-invoices. You have a few seconds to respond to the question. And while we wait for the results to come in, Candy, in your view, will the paper invoices be running in parallel for a while, or they'll be phased out immediately upon introduction of e-invoicing in China?
Sure, Shrenik. I think this question is trying to understand whether there is a transition period for companies to switch from paper invoices to e-invoices. The answer is yes, but the transition period may not be long. As a matter of fact, the current e-invoicing system can also be used to issue both paper and electronic invoices. So it is possible that the companies may be asked to switch to the new invoicing platform or portal to issue both invoices sometime. In this situation, the companies may still have to adapt themselves to the new system in a very short time period.
Right, that's pretty interesting. And we have the results on the screen for the first polling question. And as we see, there are about 62% of the respondents who have not yet started implementing. They are still in a wait and see mode for the government to further announce the changes. And the second response, which is started to do some preparatory work. So the companies are thinking about some preparatory work, and that's about 23%. But a good number of people or the companies and the corporations are still waiting for the government to announce formally the introduction of e-invoicing.
Yes, Shrenik, it appears that most of the
companies. Next slides on China, Candy.
Yeah, sure. So it appears that most of the companies are still taking a wait and see approach, which is consistent with what we have observed. So next slide, please. Having said this, with the fourth region, which the Sichuan province joined the pilot last month, we have seen more and more companies are now taking actions because the pilot region is clearly expanding. We have received a lot of inquiries from clients recently asking when they should get started to prepare for the FDEI and what they can do now. I think it really depends on the complexity of the company's invoicing process and internal controls. For example, how many pieces of VAT invoices that need to be processed on a monthly basis? How many steps to process the VAT invoice? How many systems that are related to the issuance of VAT invoices, etc. If the process is quite complex and the system is not advanced, I would recommend such companies start sooner rather than later to at least understand the new requirements, perform gap analysis to understand the gaps, and map out the actions to be taken, etc. Once the actions are available, then the company can plan for when to start to work on the challenges and also the changes to be made on the system and the process, depending on the internal process and the time needed to do the changes. For companies who are less complex, I recommend them to at least understand the new requirements, provide awareness training to the relevant teams, and engage the key stakeholders so that they can understand what may come and what's the impact from their perspectives. For those companies who still take a wait and see approach, I would suggest them keep monitoring the development of the e-invoice rollout plan and the best practice in the marketplace, so that once the invoice kicks on, they can take actions which are suitable to their business in a quick manner. Next slide, please. We have discussed the e-invoices, which is actually part of the golden tax system in China. Many of you may have heard the golden tax system, which is a backbone system developed by the Chinese tax authorities to manage tax matters and control fraud. The golden tax system has been moving on to phase 4 to provide solid support for the tax governance structure in a digital manner. So what are the key features of the phase 4 of the golden tax system, and what are the potential impacts to the taxpayers operating in China? First of all, the golden tax system phase 4 will use internet and big data thinking with the aim to provide better service experience to the taxpayers. Through the information collected from internet or big data, the tax system can shorten the time and the costs on tax process and eventually increase the sense of satisfaction of the taxpayers during the tax filing process. Secondly, during data mining and big data analysis, the tax authorities can achieve better tax management and also come out with more innovative ideas and approaches to improve their day-to-day work. Last but not least, phase 4 is powered by new technologies such as cloud computing, big data, and 5G, etc. So the system is very advanced and can drive the automation and intelligence of the traditional tax management work. Next slide, please. To achieve tax management in a digital way, the overall plan of the Golden Tax System 4 has 3 main aspects, including the electronic invoices, which we have just discussed, and also data expansion, analysis, and monitoring. The electronic invoice is clearly the fundamental source of information of the Golden Tax System. With all invoicing information being in a digital format, it will be more convenient to do data mining and analysis. The second part is data scaling. To collect more data, the new system would expand big data resources through internal and external data exchange, online and offline data linkage in an innovative way. The tax authorities will increase data exchange with other government authorities like Customs and SAFE, which is the Forex Control Bureau in China. Commercial banks may also be required to share information with tax authorities for reconciliation to the company's financials and tax returns. Finally, with the e-invoicing information and data collected from various channels, the system can do analysis and monitor special situations. For example, the system can automatically check and analyze the tax payment status of the same company or individual in different periods, different taxes, and different fees. The system can also check the tax burden of the companies or individuals of the same size or the same business type. Non-compliant tax issues could be easily identified through auto data system monitoring. Now let's move on to the next slide to see several examples on how big data has been applied in tax audit cases. The first example is to utilize big data analysis to carry out risk identification and tax management across multiple tax departments. Once a risk factor is identified, this will be pushed out to multiple tax departments within the tax bureau. such as the Risk Control Department, Audit Department, and Internal Control Department, who will look into this risk from their perspective and come out with their suggestions on how to handle this case. For example, whether this risk is significant to handle this case, whether to launch a formal audit or ask taxpayers to do a self-inspection first. The second example is to do data to dig through the information of the invoices and reconcile to the taxpayers' invoice flow, cash flow, and tax-related information to identify potential risks, and then draw a portrait of the potential audit target, and finally lock on the targets. The third one is to establish a national database of audit cases and use AI technology to identify the characteristics of non-compliant cases and improve success rate through machine learning. Some local tax authorities has even drawn a portrait of typical taxpayers who have issued fake VAT invoices through AI technology. The last one is to expand tax information sources through internet, government, and third parties to gather tax information, analyze, and then select audit targets. There are several audit cases on indirect share transfer and group restructuring, and the source of such information is from internet. These are just some examples of what the tax authorities are doing now. While the tax authorities are heavily investing on technology to enhance tax controls and management, what taxpayers need to do? Apparently, passive reaction may not lead to a good result, while taking active measures such as enhancing internal controls, deploying or upgrading tax management systems may be a better way out. That's all for my part. Back to you, Shrenik.
Thanks, Candy. That is a pretty good insight on China e-invoicing. And in addition to the taxpayers, by bringing in efficiency, the big data and its analytics is definitely going to help the tax authorities to achieve their primary goal of revenue enhancement, as we discussed initially. Okay, with that, we now move to Australia. According to the Australian Treasury, it is estimated that Australian businesses exchange more than 1.2 billion invoices in a year, and about 90% of these invoices are processed manually, either fully or partially. Uh, the government anticipates that e-invoicing will bring in an annual saving of $28 billion to the Australian economy over the next 10 years. In addition, the digitizing the billing systems and e-invoicing would help almost $130 million annually by saving the carbon emission. So these numbers not only prove that the e-invoicing is extremely important, not just for Australian economy, but also for the environment. With that, I'll now invite my colleague Rahul to share insights around e-invoicing in Australia.
Thank you, Shrenik. Hello, everyone. As a starting point, I'd like here to outline the key stakeholders in the e-invoicing ecosystem in Australia and also outline the scope of some of their activities. As a quick snapshot, there is the federal government, state and territory governments, access point providers, accredited e-invoicing services providers, the regulator, which is the Australian Taxation Office or the ATO, legislators, and of course, businesses of all sizes. In particular, I'll draw attention to the ATO and the access point providers. Australia is a jurisdiction that uses the PEPAL framework as a basis for e-invoicing. The ATO is the appointed PEPAL authority for Australia and controls the accreditation of access point providers and manages the PEPAL framework. We understand that the ATO currently does not have data feeding for tax purposes, that is, no clearance model, but we understand that there may be changes to that in the future. The ATO have dedicated resources and an e-invoicing team to support the development and promotion of e-invoicing adoption in Australia. In fact, the ATO has been active in this space, including holding a dedicated e-invoicing week in September this year. Next, let's take a look at the access point providers and service providers and the role that they play. As many are aware, in order to access the PEPAL network, an organization needs to have a functioning PEPAL access point. Now, there are more than 32 accredited access point providers across Australia, all varying in size and scale. These access point providers are particularly active and visible in the promotion of e-invoicing and the PEPAL framework in Australia. There are also providers of other services such as software, integration products, professional services, and process automation and workflow streaming technology, many of whom are accredited providers as listed on the ATO's e-invoicing website. In terms of legislative developments and the e-invoicing development on the Australian market, we'll get into this in the next slide, but it is important to understand the governing structure of Australia. That is, the Commonwealth of Australia is a federation of 6 states and 2 self-governing territories. The national government is the Australian government, also referred to as the federal government or Commonwealth government. This is relevant as there are different approaches to e-invoicing on the federal and state and territory levels, which we will outline briefly today. Next slide, please, and let's go to the poll. Okay, I think we may have the poll up in front of you now. So the first polling question, Shrenik, did you want to go through that one?
Yeah, sure. So the polling question is about e-invoicing in Australia. The question is, what do you see as the biggest barrier to e-invoicing in Australia? And the options are, number 1, the complexity of the change process, or its lack of change management knowledge skills, or it is insufficient resources and tight timelines, or lack of support from senior management, or the last option is inappropriate organizational structure. You'll have a few minutes to respond to the questions, and in the meantime, Rahul, here's a quick question for you. Are there a number of organizations? There are a number of organizations going through the system changes already. How do you see e-invoicing play into the process?
It's a great question, Shrenik. Where there are existing financial systems and IT systems changes, typically there is already a great deal of internal investment and engagement by stakeholders on systems design and change management. So this timing is useful for e-invoicing enablement for a number of reasons. And in particular, organizations can leverage off the momentum and existing engagement that's already underway to discuss overlapping change activities and processes that are relevant to e-invoicing enablement. So one such example is payment channel process mapping, as well as risk governance and process mapping there, which are key foundational pieces on the e-invoicing enablement journey. And these pieces overlap with many existing tech and systems transformations.
That's pretty interesting. And now we have the results coming up on the screen. And as we expected, the responses are evenly spread between the first and the third alternative. The insufficient resources and the tight timelines is something which most of the participants think could be a barrier for introducing the invoicing. At the same time, complexity of the change process is something which many of the participants think could be again a barrier for invoicing. Pretty much on the expected lines, and with that, we can move to the timelines for e-invoicing introduction in Australia. Rahul?
Absolutely. So the timeline for Australia's e-invoicing journey. Here's a quick overview of the journey so far, and I'll call out some of the key highlights. From 1 January 2020, there was an expectation that Commonwealth entities began paying eligible invoices within 5 days, and this applied to contracts up to $1 million. Non-corporate Commonwealth entities were mandated to be e-invoicing enabled by 1 July 2021. The Commonwealth Treasury put out a consultation paper to the Australian public earlier this year. That consultation paper outlined the idea of a business e-invoicing right, with a view to accelerate business adoption of e-invoicing in Australia. So submissions for that consultation closed in February 2022, and we are waiting to hear back from the federal government on that process. It should also be noted that in May 2022, the federal election was held and a new government was introduced, and that may also play a role in the timing for consultation results and feedback. From 1 January 2022, New South Wales, the state of New South Wales, mandated that its state government agencies were required to be e-invoicing enabled so that they could receive e-invoices. South Australia, Western Australia, Queensland, and the Australian Capital Territory have all made progress towards e-invoicing capability, with varying pilots and budget measures being announced. Effective 1 July 2022, so this year, all federal government entities were mandated to be enabled for e-invoicing. And at that time, so 1 July 2022, the $1 million threshold was removed for paying eligible invoices within 5 days. Now, this has really increased the focus on the ability of accounts payable functions to meet these 5-day payment deadlines. Large businesses are also adopting e-invoicing as well, with the likes of a major home improvement and outdoor living retailer Bunnings as one example, being one of the major organizations to become e-invoicing enabled. Most recently, the federal budget had an emphasis on tax compliance, and the ATO has been pretty consistent on its position that it is seeking systems-based justified trust. This means that for indirect tax compliance in particular, entities will need to be able to show the ATO that they have confidence in their systems and controls. And this fits really neatly with the e-invoicing functionality, particularly from a big data management and integrity perspective. And with that, we might move to the next polling question.
Yeah, that brings to polling question number 3 for us. What stage is your e-invoicing implementation at in Australia? And the options are not looking at being enabled for now. The second option is investigating options for e-invoicing enablement. Option number 3 is enabled for receiving e-invoices. Option number 4 is enabled for sending e-invoices. And the last option is enabled for sending and receiving e-invoices. While the participants respond to the questions and then we show the results in a while, we have another question for Rahul. Given that the timelines for Australia's e-invoicing development and implementation, what are you seeing organizations do to meet these changing conditions?
It's a really good question, Shrenik. And reflecting on our poll results, I guess the complexity of the change process as 35% and insufficient resources and tight timelines being 36%, it's interesting that those are the pain points, because we are seeing organizations undertake a series of readiness assessments from a functional and process standpoint. So this is a conversation that involves financial compliance, tax compliance, technology and infrastructure, and strategic partners within an organization coming together to identify the key matters that are unique and relevant to each organization for their enablement strategy. And as part of these discussions, these stakeholders are asking very honest questions of their existing processes and systems to understand just what level of change and resourcing is required. So that's obviously with the view to properly then move to charting a pathway forward for e-invoicing enablement and, of course, operation.
Well, that also resonates with what we see as part of the results on the screen. About 42% of the organizations are investigating options for e-invoicing enablement, followed by closely not looking for being e-enabled. So a bit of split, but a good number of participants feel that they are working towards enablement by investigation options. If we move to the next slide, Rahul, maybe just want to highlight as to what the companies are doing and what are the key themes in learning for Australian e-invoicing.
Yeah, absolutely, Shrenik, thank you. And from our projects in consultation with industry, government, and third-party service providers, there are some consistent themes and lessons to consider for the e-invoicing journey, and this applies to both public and private sector organizations. Firstly, organizations should fully and widely review all available access points against their specific business requirements. This involves reviewing standalone products as well as integrated technology solutions, which may form part of financial software. Secondly, organizations need to consider very early in the process whether their procurement standards, rules, or contracts require substantive updates. In particular, this is a very relevant piece to public sector entities, given their need to comply with faster payment timelines. Obligations such as this need to be understood by both sides of that transaction and typically need to be made very clear at the contracting stage. Thirdly, entities should be considering their business's broader financial and technological ecosystem and the impacts of how they manage data. In this vein, having sufficient advanced planning for change management and adoption with both internal stakeholders such as accounts payable and accounts receivable, as well as external stakeholders such as suppliers, is absolutely critical. Finally, what can have a genuinely longer-term enduring benefit in this process is having a sound understanding of your existing invoice process and the resource intensity involved in that process. And Candy touched on this a bit earlier, but even looking at a simple number like the total number of invoices processed per month and being able to compare that to post-implementation of e-invoicing usage can be a powerful data point and a very useful measure of return on investment. So early readiness and planning for change management is an overarching theme here. Changes to law and requirements can happen quickly, very quickly, but systems take some time to change. And the big takeaway here again is early planning for e-invoicing enablement and operation. So those are the key takeaways for Australia. Back to you, Shrenik.
That's very insightful, Rahul, and thanks for that. My key takeaway from this would be that while the governments are taking a cautious approach by introducing e-invoicing in phases, for the taxpayers, it's better to start early, carry out an assessment, and formulate a strategy for the implementation in future whenever the government is ready for that. And now we'll move to New Zealand. The New Zealand government estimates that there are more 280 million B2B invoices exchanged in New Zealand on an annual basis. And with introduction of e-invoicing, it could potentially bring an annual saving of $4.4 billion to the New Zealand economy over a period of 10 years. And with a target of 90% of the businesses to the central New Zealand government invoices to be e-invoices by July 2026, I'll now turn to Alan to share more insights about e-invoicing in New Zealand and an unconventional approach being considered by the government there.
Great. Thanks very much for that. So the New Zealand approach is a little different to some of the approaches around there, and it's very much a softly approach. What we are seeing in New Zealand is that e-invoice is going to be encouraged, but not mandated. And one of the differences potentially in the New Zealand situation is that the government organisation that's tasked with bringing in e-invoicing to the New Zealand environment is the Ministry of Business, Innovation and Employment, MBI, rather than in the Inland Revenue, which is the tax authority. So the tax authority is having discussions and working with MBI, but it's not got it as a key success factor for its internal reporting to government that it has made e-invoicing a success in coming in. They're working very closely, but they very much see e-invoicing in a no carrot, no stick style approach in New Zealand. What they're looking at when we're going through is just to try and remove any roadblocks or any obstacles that are in here. And we'll touch on some of the changes to tax invoices that are in there. The interesting thing that flows with this, and it's picking up in some of the questions that we can see coming through here, is for people controlling on a regional basis, this is getting quite challenging because different governments are taking different approaches. They may all be using the same basic technology at the underlying level in terms of the technology structure of the e-invoice, but the degree of focus on it and the way that they're looking at it and the speed of mandating is very different across the region. One thing, and this was reiterated by senior Inland Revenue officials that I met with yesterday afternoon, as recently as that, is that there is absolutely no move within Inland Revenue's mind to any form of e-reporting in New Zealand, even if we have organisations doing e-invoicing. The government in New Zealand very much treasures the social capital of the very high voluntary compliance that does occur in the New Zealand environment. And that may be slightly different in some of the other jurisdictions which may be guiding some of the government actions. But ironically, because there is that high government acceptance of voluntary compliance in New Zealand, they don't want to move to e-reporting too quickly or even indicate that they will do that at any stage at the moment, because they are scared that that will jeopardize the social capital of the good reporting factors. I think it would be naive to think that in New Zealand we won't move to some form of e-reporting at some stage, but some of the values that have been tossed out as to when that might happen could even be 5 to 10 years away. Now, that doesn't mean that e-invoicing won't be mandated for various other aspects, and certainly the government, in terms of its commercial actions, is trying to encourage people to use e-invoicing and has various targets. A lot of the software providers have already got their own e-invoice platforms, and it's enabled and it's there. So it's in New Zealand, but it's just not being mandated. There is this 30% tipping point that's being mentioned by Inland Revenue, which is they see that if they get to a point that 30% of the business-to-business type transactions are going through an e-invoice type platform, then that's likely to then gain momentum and get more and more people doing it, and then it will take on speed. But very much Inland Revenue is hoping that working with MB, that this can be some organic process rather than a mandated enforced process. Now, if we go to the next slide, we talked about how we were looking at removing the obstacles, etc., that are going to come through. But we want to just first ask people, New Zealand, it's a pretty small economy in the regional scheme of things. How active are people in terms of looking at New Zealand? Is it, we haven't even thought about it for e-invoicing, we might even move, or some of the other ones that are on the screen. So we'll just give people a couple of moments to go through in terms of looking at those results as they're coming through. So we'll just give people a moment to try and come through. And it's interesting just listening and seeing some of the other questions that are coming through around that tension that's happening on a regional basis. And we'll circle back at the end of the presentation if we have time, just to try and look at how you might manage these different rules that are coming out from different governments as we go through. So they're up to about 60 responses so far. That's interesting. So, right, we've pushed the results out. So hopefully people can all see that up on the screen now. So not at all is right up there. And it's interesting. It's the fact that there is still some people that, regardless of what's happening here, will be moving to e-invoicing. But by and large, it's very much, I think, going to be linked into the regional approach, and that e-invoicing is arguably not just a tax issue, and that you're hopefully looking at some of those other structures that fit around it and the economic gains rather than just being tax gains that are in there that should start the conversation. But having said that, there's always trade-offs between the various resourcing requirements that everyone's facing. If we move to the next slide, we talked about how we were going to remove some of those roadblocks. And what we've got here is there's been a couple of tax bills that have gone through, one that passed into legislation basically from 1 April this year, and another one that will pass into legislation from 1 April next year. But the essence of what they're doing is moving from the traditional tax invoice document that always had to have the word tax invoice, had been in force in New Zealand since the legislation was introduced in 1985 for the 1986 enactment of GST. And what we're moving from that very prescriptive, very described shape into almost a cloud-like version on the right-hand side there, where we're saying, we don't care how you hold the data as long as you hold this data. You can hold it in a vendor master file or a customer master file, or all of these sort of data with then just little bits of transaction data on the other factors. If when Inland Revenue comes in, you can pull from these different data sources and then get the data to come out, then that will be fine and that will meet your taxable supply information. So we're moving from a tax invoice concept to taxable supply information. And on the final slide that we've just very briefly got some points that will show you some of the next steps that we're moving in terms of the data requirement that is in there. So if we can move to that next slide. Thank you. And that next slide, on the left-hand side of that green line, that's the historic tax invoice. On the right-hand side, that is the new taxable supply information, and it fits in with this whole bit more relaxing, a bit more flexibility. So that's, in a nutshell, where we're looking at from a New Zealand perspective, and we'll now pass back.
Thanks, Alan. Very interesting soft approach adopted by New Zealand government. While it is conventional, based on what you just explained, it seems pragmatic and practical in the given situation. With that, we now move to India. India, one of the largest economy globally, adopted e-invoicing early on in a phased manner. And just yesterday, we crossed the volume of 2.5 billion e-invoices being generated in last 24 months since introduction in October 2020. That's a huge volume and a number. Currently, more than 40% of the B2B and export invoices are covered under e-invoicing in India. And in terms of the number of taxpayers, it covers about more than 50% of the total taxpayers who are registered and eligible for GST. With that, a quick introduction of what e-invoicing is all about in India. Essentially, the taxpayers who are eligible for e-invoicing, and the threshold has continuously been reducing, as you see at the bottom of the chart on the screen. Eligible taxpayers are required to report their B2B and export invoices for the purpose of e-invoicing. The mechanism works like this: that prior to issuing the invoice, they have to be reported to a central portal managed by the government. The government portal issues a unique invoice reference number and also a QR code for each unique invoice. Now, the QR code is required to be embedded on the face of the invoice. And once that is done, it becomes a valid e-invoice for the purpose of sharing with the customer. The recipient or the purchaser gets input tax credit only when there is a valid e-invoice issued by the supplier. In terms of coverage, all the B2B and export invoices are covered, including the corresponding debits and credit notes. There are certain exclusions and exemptions given by the government from the coverage of e-invoicing for or specific reasons, and it's pertaining to specific industries. In terms of an overall approach adopted by the government, it's been similar to the other jurisdictions, where first the larger taxpayers were covered as a part of e-invoicing, and gradually the government kept on reducing the threshold and covering more taxpayers under e-invoicing. And as we talk, we've been hearing discussions around introduction of e-invoicing for B2B supplies as well. While that's going to take some time because there's a huge volume of B2C invoices in India, but I don't think, in a personal view, it's not something which is going to take a long amount of time. And with that, we'll have the whole economy covered as a part of e-invoicing, which makes it easy for the government to manage the taxpayers and also get insights and analytics which can be used for revenue enhancement and other policy decision-making purposes. Moving on to the next slide, essentially, whether you are a large organization who's already a part of e-invoicing for last 24 months or so, or you're a smaller taxpayer or a mid-sized enterprise, e-invoicing has implications for you. While you'll be doing an e-invoicing as a large enterprise, as and when your smaller suppliers come for e-invoicing based on their eligibility, it's going to have an implication on your working capital as well as on your input tax credit, because non-compliance by any of the trade partners or ecosystem partners, let's say your vendors or customers, it could impact your working capital. And typically, we've seen that for the smaller taxpayers who come for e-invoicing in the subsequent batches, there are typically the lack of IT preparedness and also the lack of preparedness from a functional perspective to enable e-invoicing. So from that perspective, it's important that not just you are compliant with e-invoicing as a large organization, but also ensure that your trade partners also comply with requirement for e-invoicing. Similarly, if you're a medium or a small size enterprise, again, It's essential for you to comply on your own behalf from the e-invoicing requirements. At the same time, ensure that you issue timely invoices to your larger trade partners. Otherwise, it could have an impact on the trade relationship as well as their input tax credit, which could have a pressure on you. So all in all, it's been pretty good and smooth in India so far as the coverage of taxpayers are concerned, and we are looking forward for the government to have reduced the threshold further in next few months. Uh, with that, we'll now move to the next slide, which covers the regional strategy for e-invoicing and real-time reporting, which is adopted by many geographies. In our experience, it's a myth that the tax function is a country-specific, heavily dependent on the local rules, and requires specialist country tax knowledge at each of the geography level. In reality, tax function can successfully be run centrally, and e-invoicing being a part of the tax function can also derive its benefits by doing a global as well as a regional strategy to achieve the maximum benefit out of it. On the slide, you see there are some of the key components or the areas where a central or a regional strategy can be formulated to take out the maximum benefit out of e-invoicing. The first one, of course, naturally is technology. A common technology stack or a technology pool of resources is something which is very important. And having a common technology in the region or across various geographies is something which helps to standardize how the data goes into for the purpose of invoicing and how it is ingested back into the system. Similarly, apart from technology, the regional knowledge of e-invoicing related requirements is something which is very important. We've seen companies forming regional e-invoicing COEs or regional COEs for digital reporting. Now, with a common pool of resources at the central level and a limited number of resources at the geography or a country level is something which helps to achieve benefits by utilizing the resources to the maximum and also share the knowledge of invoicing and experience of one country into another. At the same time, we've seen many countries adopting a mechanism where there's a global advisory board of the HQ, which will typically advise on critical or crucial issues to the regional headquarter of that company or to the respective entities in the geography. So what you have is a geographical benefit of localization at the same time the global advice from the HQ. One interesting thing that we've seen many companies adopt specifically for digital reporting and also to an extent for e-invoicing is having a shared service center which is situated in one of the countries in the region handle these activities, right? So you have a large pool of people who can handle it more efficiently rather than respective countries having their own people. The final thing around e-invoicing strategy being regional is the regional data pool. Now, we heard Candy earlier and also we heard Raul earlier talking about the data. Now, having a regional data pool will help not just for the reporting purposes, but also for the critical decision making so far as the businesses are concerned. So all in all, we've seen that while the government's adopting a regional strategy, you've seen one country adopting a similar or identical rules compared to the neighboring country. At the same time, it's important for the taxpayers also to have a strategy which is more regional and more aligned towards achieving the common goal of reporting on a real-time basis. With that, that is the last one in our presentation. Thanks, Alan, Raul, and Candy for your time and discussion and insights. This brings us to the end of our today's discussion. We now have some time to respond to some of the questions from our audience, and we'll turn to the Q&A. I've seen a first question being raised for China. Candy, would you want to address that question?
Sure. I think that question is, are there any thresholds for application of e-invoicing? The answer is no. There is no threshold for the application. Currently, the tax authorities are selecting larger companies and also smaller companies to do the testing based on their different system and invoice requirements. And in the future, all Chinese companies will be mandated to issue e-invoices with no threshold.
Right,
Janik?
thanks. Thank you, Candy. That's helpful. There's another question for China. Currently, a lot of divergent approaches being tax offices in China are being followed depending on the region. Would an enhanced GTS force aligned tax authority approach across the country would be helpful?
Yes, I think that question is actually talking about how the Chinese tax authorities are managing tax interpretation or tax disputes on one specific question. The problem is that in China, the tax rules are quite high level, I would say, and it's normally subject to the discretion and interpretation of the local tax authorities on specific matters. So the enhanced GTS is only a tool to enhance tax collection, tax filing, and also try to do data analysis to identify the potential tax risks. But it will not help to resolve the different interpretation of the tax officials in different regions in China for the same question.
Right. Alan, I turn to you for a question. Different countries will implement their e-invoicing in different manner. How do you see common areas of concern and implementation challenges for all countries?
I think it's a case of actually looking at e-invoicing from a couple of different aspects. And one is that, and it's a common theme that's coming through a number of the questions, particularly people saying, well, I've got to do this through my ERP system, and then I've got to have this separate e-invoicing system. And even some of the China questions where they're saying, I need to do corrections, and the e-invoicing system can't quite do it yet. And what I think by there is, when we're looking at it from a regional approach, you need to look at, does e-invoicing have a structure that we can work with that will work with our commercial aims and will actually enhance things by basically being a more efficient electronic data interchange, an EDI, that will work and take out some of the manual steps that we currently have? Or is it something that's going to be seen as, this is just another layer of government compliance costs that are going to be layered on top of what we're doing? And you may find that you get a different answer in different countries depending on the different rules. And the short answer for that is, none of it is easy, and it's always challenging having a regional role with different tax rules.
Couldn't agree more, Alan. Rahul, there's a question for you. Unlikely we will take on e-invoicing in Australia unless it becomes mandatory. What are the timelines for mandatory introduction of e-invoicing in Australia?
Thank you, Shrenik. So it's only e-invoicing in Australia has only had mandates for the public sector so far. We have no update from the consultation on mandatory introduction for the private sector as yet. And I think that the business e-invoicing right I mentioned earlier, which was up for consultation in Jan and Feb this year, that is really the approach that the government has indicated they're likely going to take, which is voluntary but incentivized. That said, there are, and you know, I'll refer back to, I think, a couple of the other questions that have come through about ERP systems and how is e-invoicing actually benefiting the business. Data integrity is a huge piece at the moment. So having the ability to leverage off this four-corner model that e-invoicing offers, and a secure end-to-end process there to be able to contain information and integrate that with your ERP. It's just a huge game changer when it comes to having integrity of data, being able to manage your data, and also being able to use that data in a powerful real-time manner to make decisions. And that's why, you know, consistent with what you've all discussed today, having that regional approach enables that regional power to control, understand, and make better business decisions as well. So it is certainly an opportunity for businesses to also take back control a bit of that data and that process.
Right. Thanks, all. And we have a connected, interesting question. For multinationals with operations in multiple jurisdictions, what is the recommended approach for e-invoicing? Should it be done at a country-by-country level, or perhaps together, or it should be something which is a slice and dice approach? And maybe I can try and respond to that question. From the planning perspective, a global approach is something which makes sense because principally the e-invoicing related requirements are similar, if not same. Number one, the approach remains the same from the government's expectation perspective to have a real-time reporting. Sorry. I request Candy to come in here, please.
All right, it looks like we've got some issues on there. There's a maybe if we look at some of those regional ones, we've got those questions that come through. But one of the things which I think is just interesting, Candy, I'm not sure if you can see that latest sort of question that's come through, and it links in. There seems to be quite a few detailed questions that are coming out of China, and China's obviously in some ways with that the mandatory a lot more advanced from New Zealand and Australia perspective. And Candy, maybe you can just provide some comments about some of that aspect in that latest question that's come through around the T&E claims.
Sure, Alan. So on the T&E, I think the question is, are the T&E claims, reimbursements, receipts, and fapiaos required to be validated and stored as if with vendor fapiaos? The answer is yes. In China, not just fapiaos, which is the Chinese name of e-invoice, but also the related supporting documents like contracts, payment certificate, and also the T&E claims and all the other related documents should be stored in some safe place for inspection purposes. And then also for China, what's the latest update on the availability of Leqi engine API? For Leqi is API developed by the Chinese government to help process and issue the e-invoices on a batch by batch basis instead of piece by piece basis. So this Leqi offer is very welcomed by many large companies who want to issue large volume of e-invoices. And based on our intelligence, this Leqi engine is still being tested by the government. And we have a few clients, including Deloitte China. We have raised our hand to use the Leqi engine, and we are still waiting for the approval of the tax authority. So once the system is tested, I think the government will open the door to more taxpayers. And in terms of Plan B, I actually think there is no real Plan B other than manually issue the e-invoices, which may be a nightmare to the large corporations. And I can see there is another question for China, which is that they don't see the e-invoicing actually benefiting the taxpayers because under the existing GTS is already an e-invoice in that it already requires companies to carry out reconciliations between ERP and the GTS system. I think the current GTS is so-called electronic in that the taxpayers need to submit all the paper invoice information into GTS on a real-time basis. So the existing GTS will have the information in electronic format by itself. However, this is not as advanced as the FDEI, which we just shared, because for FDEI, the taxpayers can issue e-invoices by itself, which can resolve lots of problems with the paper invoices. For example, the paper invoices are lost or missed during the process that can cause problems. And also this can help save the courier or express expenses to send the invoice to the vendors and customers. So there are lots of benefits for the e-invoices, but due to the time limitation, I think we have 1 minute left. So I would like to give the mic back to Shrenik to close this session.
Thanks, Alan, Raul, and Candy. That's all we have for the. I'm sorry, Alan, you'll have to close for me. I'm sorry.
Okay, that's fine. So as you can see, there'll be some abilities for you to access the archive through various aspects on this. and also you can download the CPE certificates if you need that, in terms of clicking on the icon down there on the screen. And I think we'll just wrap up with thanks for all the presenters and thanks for the people behind the scenes that make these happen. And as a sort of final note, we have some further ones that will be coming up in terms of Hong Kong and some of the rules around passive income. But just the final thing I'd say to everybody out there is good luck in terms of e-invoicing. It is going to be a journey, and it's not going to be an easy journey all the way through. Hopefully in the future, it will be something that's working really well, but there will certainly be some challenging times going through. So thanks everyone for the questions as well. And I think there might be some technical issues potentially for some people on the CPE link, but the team will link up with people if they've got any issues on that. Thanks all, and have a good evening, afternoon, and wish you all well.